Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, April 16th, 2008. Well, we talked about it yesterday, folks. We were setting up for a rally, and sure enough, off to the races we went today. The indexes soared higher. Beautiful move today. Across the board, 2+% on every index. The Dow was up 257 points. The Nasdaq was up almost 3%, or 64 points, and the S&P was up about 30 points, or 2.25%. We talked about the differences here in what we were seeing in the charts, and we actually were encouraged by the bearish signals we had been seeing in the psychological levels of this market. And those of you guys that have been following these videos for multiple days, we actually took great care in analyzing those psychological levels going into Options X, because you guys know, and again, this is no new news to those of you that follow these videos on a daily basis, when one position is overbearing in the market, whether it's bullish or bearish, into Options X, you have to expect volatility and a spike the opposite way. Sure enough, we had noticed ever since Friday's sell-off. By the way, we've been calling for a rally now for about a week and a half to 2 weeks, folks, as you guys know, ever since we've been consolidating. And as of Friday, we had a lot of doubters out there. A lot of doubters saying, well, it looks like we're going back to the lows, this, that, and the other thing. And, we stuck by our guns because we follow the charts. It's as simple as that. Price pattern time, you give that to us, and the psychological nature of the markets, the ability to read that, which is very easy to do as long as you follow the media and the overall sentiment out there, indicators. You can just do that. You put those all together, and our proprietary techniques, obviously, and you can get precise targets, supports, resistances, and movements in the market as seen today. Now, let's get into the charts, guys, because it was a fun day to trade today. There's no doubt about it. A powerful move up. Now, volume wasn't amazing. It was strong, but it wasn't amazing considering how much we were up, so we have to monitor that, and I'll show you guys the key volume indicators we follow, obviously, on the charts, and I'll explain what our possible reasons could be for lighter volume the last couple weeks. Obviously, consolidation yields lighter volume, but the reason why wouldn't it be much, much heavier today, we'll go into that, obviously. Now, you can see the intraday chart on the ES here, folks. And those of you guys that follow the ES futures, you guys know we watch the 10-minute intraday chart for the intraday moves. We like it because it's the best indicator for us for pattern, price, and time. You can watch. Some people look at 1 minute, some people the 5, but we find that to get the better moves out of the market, if you're just a tiny scalper, you watch the 1 or the 5. We like the bigger moves in the market, so we follow the 10. Now, you can see it was basically a gap and run here. Gap and go is what we call it. And on this Whipsaw Wednesday today, it whipsawed all those shorts and just squeezed them and squeezed them and squeezed them. You had here 6 in the morning. The market started to rally. And again, Intel had phenomenal earnings yesterday. JP Morgan had nice earnings this morning, which continued the push. And again, the charts are telling you this. The charts were telling us this was going to happen, and sure enough, a nice push. So again, you see the move up here. You see a tiny pullback, but it's not enough to really let any shorts out. You see a move back up. Then it fakes people out and says, hey, guys, maybe this is an M pattern with a double top here. No. Anytime you have this strong of a market, do not anticipate that unless you see a major breakdown in pattern. And as you guys see, we came right back in. Looked like they faked people out with a small break of the 20, only to rally the market up even stronger to new highs. And then, as we've been saying, watch these key earnings reports. We talked yesterday about IBM after the bell today and eBay. IBM came out and blew Wall Street away, and you can see the spike after hours in the futures here. Then we closed after this bar, so the futures are trading about flat here on the ES. But the tomorrow, this technology will be very, very strong. Very, very strong again tomorrow on IBM, at least initially. Now, there are some key earnings tomorrow morning. Precisely would be Merrill Lynch that needs to be watched. The financial players are reporting in the mornings. Technology usually reports after the bell. So really watch these financial players. If they can come out strong tomorrow on Merrill Lynch, like JP Morgan, you'll see a continued rally across the board and everything. If some negativity seeps in, then we may have a pause day. You guys know how we believe. We believe after a giant move, sometimes you have a pause day, or oftentimes you have a pause day. And this could be the case, although I am favoring that this could be a dual push in the markets, although you had a monster rally today, so a pause day would not be out of the question. A lot's going to come down to Merrill Lynch tomorrow, in my opinion, and then the market will probably tomorrow afternoon go on hold until Google reports earnings after the bell. But anyways, doesn't matter what the earnings are, you guys. It's just a reactionary effect to what the charts are telling us. You guys know we talked about a rally, and I'm going to show you guys the intraday chart so we can focus in on that. And the daily chart, excuse me. Let's flip over to the daily chart now. SPY daily chart. What did we talk about yesterday? We talked about a possible head and shoulder formation here. We were looking for it to form based on what we had seen in the charts. Here's the head right here that I'm making. It's an inverse, and that's, I have to be very clear on that. This is an inverse head and shoulders, which is a bullish indicator. Head and shoulders is often a bearish. All right, now what we were looking for here is the coming up of another shoulder. So you're looking for a move such in this type of pattern to watch for that to happen, for the other shoulder to form. Once you break the neckline of that, you're off to the races, and again, we've been talking about that. Now, this point right here, folks, should we move up tomorrow right into it? This is going to be resistance, okay? Anytime you move up into this type of resistance line, the market probably will take a pause. It's very unlikely that we'll break out on the first attempt. You may need a couple days of consolidation up in this area again, should we get up there on the SPY before we break out. All right, and I really want to make that clear, guys. It's not just that clear cut. It's not like you just push up. You have to realize resistance points still are in this market. And listen, we could always consolidate a little more here and create a better shoulder. This is among the smaller sizes of a shoulder, and we really have to focus in on it, as this might not be done yet. Remember, just because Whipsaw Wednesday is over doesn't mean Option X is over. There's going to be more whipsaw to go, I'm sure. So again, don't let you don't want to let your guard down. That's my whole point of this little spiel here. So in any case, watch for resistance right here. This is going to be resistance. The market may need to touch that and then pull back for a couple days before breaking, possibly higher. We'll continue to follow the charts as things can change every day. Remember, I talk about this. Every day we get a new piece of the puzzle. Today we got this nice piece right here, and it fits into what we were thinking, and the charts have been telling us, our proprietary technical analysis has been telling us as well. All right. Again, on the downside, oh, by the way, before we get to the downside, notice how yesterday I mentioned how we were creeping back to that necktie? Well, guess what? Today pushed us above that necktie. Hopefully this establishes itself as support now at the necktie region here. And even if we do go sideways before busting up again, this should be solid support here as it continues to form this side of the shoulder. All right. Now, volume. Volume was heavier than the last 2 days, but nothing crazy. See right here, guys? So volume was slightly better than the last 2 days on the SPY, but it wasn't anything crazy. Now, you might say, well, why has volume been lighter? Well, there's a bunch of reasons that could be out there. I'm not 100% sure on anything, but you talk about redemptions out of hedge funds. There's been a lot of money taken out of this market as the amateurs have been pulling money out. If you had stuff in your 401k or in various investment accounts, a lot of people have pulled stuff into cash or into the bond market, trying to protect assets, and that does leave less money to be traded out there in the market, maybe possibly causing the lighter volume situations. Either way, should we get a big news event or a big spike here, the volume will kick in. It'll just be a matter of time. Unfortunately, whether we're at a bottom or we reach the bottom or we're going to flush back down, it's always the little guy that misses the bottom, sells at the bottom, and buys at the top. So, you hate to see that, but it's the nature of the beast. And we just have to understand it, and that's why these videos are out there, to help everyone understand what happens there and to try to avoid it. Okay, that's the whole idea here, guys. I just want to improve everyone. We all, InTheMoneyStocks.com, his goal is to inform the little guy and make market calls. We're a research company, and that's what we pride ourselves on, doing research and market calls. So in any case, IBM, strong earnings after the bell. I'll show you guys the level 2. I love doing the level 2 little thing here in the chart. Closed at up $3.30 on IBM. So it had a good day today. After hours, 124.08 by 124.10ish, give or take here. So it is trading up $4 more after hours, almost 4 anyways. And that's going to keep tech strong. Now, IBM's an interesting situation here because a lot of their gains here came from overseas transactions. Remember, when someone buys something overseas, the money has to be given in that overseas currency, then they transfer it back into the United States currency or the US dollar. Now, in that transfer, they're getting a lot more dollars back because in the time it takes, the dollar's falling in value. So it's almost an interesting situation that needs to be monitored. But all these companies that are doing overseas transactions, they're going to have stronger earnings, although I think after IBM, it's going to be priced into the market on these stocks. So just be aware of that as well. All right. So again, IBM trading at 124.20 right now, up about $4 in after hours after being up $3.30 during the market. All right, let's check out the Nasdaq chart. Nasdaq, same basic chart pattern here as everything else. You did see the push down here where a lot of doubters came on board, but we noticed the light volume and the retrace. Remember we talked about the Fibonacci retrace here? It had almost a 50%, basically in line with a 50% retracement here. A move up like this. You had a 50% retrace right into this 50 area on the SPY. It was almost equal to that, or about 0.38, which is another Fibonacci level, right into that level right there for the Nasdaq before busting back through the necktie to the upside. And again, we want to see if this becomes now a shoulder, all right, Does this become a shoulder? And we'll find out in the coming days. Again, tomorrow, there's a possibility for another push because of IBM. Technology should be strong again, but we always talk about a possible pause day too. But it is options expiration week, so it's going to be, there's a fair. It's a little tough of a call here, and we'll have to just kind of play it and wing it as we go into the options X. Now we'll go into next week, obviously, on Friday's video and Thursday's video, but more likely than not, we are expecting more of a rally here. If you break that top neckline here on the head and shoulder formation we were talking about, you could see a very monstrous rally as a lot of bulls will jump on board. Enough of this today, folks. It was a fantastic day in the chat room. Fun times, guys, in the E-mini day trading stock chat. Come join the swing trade alerts. We had some nice moves in those swing trades today, guys. No doubt about it. I can't really talk about them until we close them out. But nonetheless, the options alerts going well as well. Private consulting, institutional consulting. If you're an institution or hedge fund and you need help calling these moves, just contact us. We're here to help. Have a wonderful evening, guys. Talk to you soon.